Broadcast is now starting. All attendees are in listen-only mode.
You mute your speaker on your laptop.
All right, well, good morning. Thank you guys for attending the Disability Income Plan employer training. This morning I have with me, well, first, my name is Gwen Richardson, and I have with me some of my colleagues that will help throughout the webinar. We also have a live attendee with Central Community College, so thank you for attending. On today, we have Jake Howell that will be answering your questions. So if you do have questions, please send your questions and Jake will respond back to you directly. We also have Margaret Hendershot that is here to discuss how our supplemental retirement plans can work well while members are in receipt of disability income. So before we begin, this presentation is based on current legislation and is subject to change without notice. So all the information that we're discussing is what's been passed into law. If there's changes that will be made to the disability plans of North Carolina, we will apply the changes as the law requires us to do so. So this morning, we're going to talk about the different types of service, membership service, which is a common service that we all share today because we're all here working. We're going to talk about the eligibility of the Disability Income Plan of North Carolina, what makes a member eligible to request benefits under DIPNC. We're going to talk about short-term disability, preliminary long-term disability, and extended short-term disability. So we're discussing the first phase of the Disability Income Plan of North Carolina. So DIPNC was created in 1987 by our North Carolina General Assembly with an effective date of January 1st, 1988. The purpose of the plan was to provide, or is to provide, equitable replacement income for eligible teachers and employees who became temporarily or permanently disabled from performing their normal job duty. So let's talk about the different types of services. I mentioned earlier, we all share membership service, that's contributory membership, and that's where we actually got up, went to work. 6% of our wages was withheld and contributed to the retirement system. So being a member of the TSERS is a condition that is set by law. If you are working 30 hours or more per week for 9 months out of the year, you should be a member of the TSERS, the Teachers and State Retirement System. There's other types of services in which members can also earn, that's non-contributory service, and that is time where a member may have been on disability, short-term, extended short-term, or even long-term, and that 6% was not withheld from out of their wages, but they still received service as if they were actually working. So that is called non-contributory service. And then there's credible service. That is a sum of all types of service that can be through sick leave that a member has that's certified by you, the employer. It can also be service purchases or transfer service. That is considered credible service. So it's a sum of all types of service. So let's talk about the disability, different plans. So we mentioned that we're going to discuss the different phases, beginning with short-term. Under the short-term disability, that is paid by you, the employer. Preliminary long-term is also paid by the employer. Extended short-term and long-term is going to be paid by the Retirement Systems Division. And today, again, we're going to talk about the first phases. Long-term is a different training. And also some members may be eligible for state disability retirement. So for some of those folks that started many, many years ago, under state disability, you can retire instead of taking the benefits through the Disability Income Plan of North Carolina. Under state disability retirement, we project the service to a member's first unreduced that can be projected to age 65 or projected to 30 years or 60 with 25. But with state disability, if your employee meets that eligibility requirement, they can opt to take state disability versus taking DIPNC benefits. So the eligibility requirements for short-term or extended short-term or in preliminary long-term, the member must have 1 contract year of TSERS or retirement optional retirement plan membership, 36 months before the date of the disability. So you have to have a year of service. Your employee also must be determined mentally or physically disabled, in which they cannot perform their normal job duty. Now, for short-term disability, you as the employer, you can make the determination, or it can be made by our medical board. So in the employer, you can also send the forms and the paperwork over to us directly to make the determination, which would be sent directly before the medical board. The disability also must have had incurred at the time of employment, active employment. So the member, if they were exhausted in leave or if they were in receipt of temporary or total workers' compensation. The disability also must be continuous, ongoing as well. For the application for short-term disability, it must be completed no later than 1 year after the end of the wait period. Now also, employees can apply for short-term disability even if they are already eligible for an unreduced retirement benefit. And we see that sometimes where a member can be eligible to receive unreduced and they will make application for short-term disability. Now, effective June 25th, 2008, the law did change, which means there is a provision that limits the time period for application for DIPNC short-term disability to no longer than 365 days following the last day of the waiting period. So there was a law change last year, June 25th, 2018. Now, if the date of the disability is prior to the completion of their contract year, the member is not eligible for short-term disability. So again, they must have a year of service. Now, there's always an exception to a rule. So under salary continuation, that will count towards the year of their contract. And the leave, again, must be continuously, so it can't be sporadically from time to time. The following slide, we have some examples. So each of the members, they worked a 12-month contract. They were hired on August 22nd, 2017, and they worked through June 13th, 2018. Now also each of the person was certified as being disabled on June 13th, 2018. So these are 12-month employees hired 8/22, and they worked through June 13th of 2018. So Susan Smith did not have any leave to exhaust. Now, as a result, she was not eligible for short-term disability because she didn't have a year of membership service. So again, she was hired 8/22, she worked through June 13th, became disabled on June 13th. So Susan Smith was not eligible. She didn't have a year of service. Elena Vega, she exhausted leave from June 13th through July 2nd. So Elena qualified for short-term disability because the time she was exhausting leave, that she qualified, she met the membership requirement for a year. Now, Jana Jones, she exhausted leave sporadically. She exhausted leave on the 18th of June, the 25th, and July 2nd of 2018. Now, Janet Jones did not qualify for short-term disability because her exhaustion of leave was not continuously, it was sporadically. So the short-term waiting period, a member is not entitled to receive any benefits from the short-term disability or the DIPNC benefits until their 60-day waiting period has ended. The 60-day waiting period will begin the later of either the last day the member physically worked, the date that the doctor certified the member disability, or the date following 365 calendar days of employment as a state teacher or a state employee. Now, during the wait period, employee, they can exhaust leave, that can be vacation leave, comp time, bonus leave, or even share leave during that 60-day wait period. Now, there is something what we call a 365-day rule, and that's when a member has a year of contributory service of time, but they have not actually been employed for 365 days. Now, under the 365-day rule, the 60-day wait period will begin after the member has been employed for 360 days. So let's consider example Betty Smith. Betty Smith began employment on August 26th of 2017. She's also a 12-month employee. Betty Smith also worked August 26th of 2017 through July 3rd of 2018. Betty Smith physician certified her disability occurred on July 3rd, 2018. Now she has 1 year of contributing service to make her eligible for short-term benefits. Under the 365-day rule, this member's date of disability will be August 26th of 2018. The 60-day wait period will also begin on the 26th of August. So Susie Smith began employment on August the 5th of 2017. She's a 10-month employee. She worked months August through May. Member worked August 5th, but that's her contract, August through May. And she worked August the 5th, 2017 through May 9th of 2018, part of her contract. Her doctor certified her disability occurred on May 9th, 2018. The member has 1 year of contributory service to make her eligible for short-term benefits. Under the 365-day rule, the date of disability will be August the 5th. The 60-day wait period will also begin on August the 5th. So sometime during that 60-day wait period, some employees may want to go back to work. They want to give a trial on their benefits. So we have what we call trial rehabilitation. Trial rehab during the wait period is defined as a return to service in any type of capacity within the 60-day wait period. During the trial rehab period, 6% is also withheld from out of those wages. Now, during the wait period, a member may return to service for trial rehab for periods of no more than 5 continuous work days. The weekend or holiday will not interrupt the 5 consecutive days of trial rehab. A return to service for any portion of a day will be counted as a full day, and it's also considered part of the member's 5 consecutive days. A return to service of no more than 5 consecutive days will not cause a new wait period to begin, but it's going to extend this waiting period by the number of days that the member went back to work. General Statute 135-104B, if the member works more than 5 consecutive days, we have to begin that 60-day wait period again. So sometimes employers will reach out to us for assistance on how to establish the first day of the wait period, because sometimes that can be a little tricky. So we're looking at, you're going to determine what was the last day that the member worked, or the last day that the member exhausted some type of leave. You're also going to look at the date that the physician certified the member became disabled, if there was any type of trial rehab, return to work. And also you're going to look if that 365-day rule applied. So we have some examples. Jack Smith, which is going to be our first example, worked beyond the date that the doctor certified their disability. So we're going to look to see what is the first day of that wait period. Under Judy Smith, our example, the doctor certified her disability after the last day that the member worked. Under Linda Smith, the member went back to work under trial rehab, so that extended the wait period. So we're going to look and see how that the first day of the wait period began. And Tom Smith, the disability occurred during a month which was not included in the member's contract year. And John Smith would be probably a 10-month employee. So example one, Jack Smith. Jack Smith worked beyond the date that the physician certified their disability. So the date of hire for Jack Smith, May 10th, 2014. He's also a 12-month employee. So we're going to establish the last day work according to the Form 700 that the employer completes. The last day work was October the 13th, 2017. So they were hired May 10th. Last day work with October 13th. The doctor certified his disability on September 12th. So the disability was certified by the doctor prior to the last day work. Jack Smith did not go back to work, so there wasn't any trial rehab. The first day of his waiting period is going to be after the last day that Jack Smith worked. So remember, the doctor certified that he became disabled September 12th, but he worked beyond the doctor's certification. So the first day of the wait period is after the last day that he worked, October 14th. So 60-day wait period. So we're going to start counting from October 14th, that's 18 days, the 14th through the 31st, 30 days from November, and then from December 1st through the 13th, that's 12 days. So the wait period, through the 12th, the wait period was October 14th through December 12th of 2017 was a 60-day wait period. So Jack Smith's short-term disability period is December 13, 2017 through December 12th of 2018. So let's consider Judy Smith. Under Judy Smith, again, the doctor certified her disability after the last day that Judy Smith worked. So the certification was after the last day. So if the physician certified the disability after the last day work, the date of disability will be the date that the doctor certified. The date of disability cannot be before the date that the physician certified the disability. So under Judy Smith, she was hired July 1st, 1994. She's also a 12-month employee. So the last day work for Judy Smith was December 4th of 2017. She also exhausted leave through February 3rd, 2018. The doctor certified her disability was January 31st of 2018. There was not any trial rehab. The first day of the wait period would be the date that the doctor certified the disability, January 31st. So looking at the wait period, the last day, the date of certification of date of disability was January 31st, so that's one day. We're going to have 28 days in the month of February, and then 31 days from March 31st. So the wait period was from January 31st of 2018 through March 31st of 2018. The short-term period began April 1st, 2018, and it will go through March 31st of 2019. Let's consider Linda Smith. So under Linda Smith, she went back to work for trial rehab for 4 days. So her wait period was extended by 4 days. Linda Smith, also a 12-month contract employee without any break in service. Her date of hire was March 1st. The last day work was January 2nd, 2018. Linda Smith also was exhausted leave on February 14th, 2018. The date that the doctor certified her disability was January 6th, which was after her last day worked. She went back to work for 4 days during the wait period from January 21st through the 24th. The first day of her wait period would be the date that the doctor certified the disability. So the wait period began January 6th of 2018. So January 6th through the 31st, that's 26 days, all of 28 days. And then because she went back to work, the 60-day period would have ended on the 6th, but because she went back to work for 4 days, the 7th through the 10th, that extended that 60-day wait period. So Linda Smith's short-term period began March 11, 2018 through March 10, 2019. So again, keep in mind that the employee go back to work during that 60-day wait period. It's going to extend that 60-day wait period. Tom Smith. Tom Smith is a 10-month employee, was hired August 1st, 2004. His contract is from August through May. Tom Smith's last day work was May 28th of 2018. The doctor certified his disability on June 10th of 2018. The first day of his wait period is also going to be the date that the doctor certified the disability, which was after his last day work, June 10th of 2018. So June 10th, first day of the 60-day wait period, that's 21 days from the 10th of June through the 30th. 31 days for the month of July. And then from the 1st of August through the 8th of August, that is the 60-day wait period. Tom Smith's short-term period begins August 9th of 2018 through August 8th of 2019. Now for our 10-month employees or 11-month or 9-month contract employees, if that disability occur outside of their contract, the member must have been exhausted leave, or they also must have shown intent to return back to work for the next school year. So that's also important. So short-term disability benefits can be paid up to 365 days. Again, the benefits begin after the 60-day wait period. The death benefit is also payable while the member is receiving short-term disability benefits. So again, there's always some exception for the 365-day payment. So if the employee died during the month of the last month of their short-term period, the employee is going to pay the full month. Or if the employee retired the month following the last month of the short-term period, so the employer pays a full month of short-term period regardless of if it exceeds the 365 days of short-term disability. So during the disability, the short-term period, health insurance also can continue for members if the employee has 5 or more years of contributory membership service prior to the date of the short-term disability beginning, the premium for the member's health plan is covered by the employer. Now, if your employee had less than 5 years of membership service as of the date of the short-term benefits beginning, the employee can continue the health plan by paying the full cost himself. During the short-term benefits, the health insurance premium is also can be deducted from out of the short-term benefit. So under the 80-20 plan, premiums are required for employees enrolled in the 80-20 plan effective 1/1/2017. Premium for the 70-30 plan also. So there was a change in the health insurance, health benefits, insurance for disability benefits. I think that went into effect maybe a couple of years ago. The state health plan, they will not do a retro re-enrollment for anyone that's approved for disability benefits. Once the payment is approved, the Retirement System Division will notify the state health plan, and the coverage will become effective the first of the following month after the approval. So if the employee's short-term disability benefits ended prior to the extended short-term benefits have been approved, there could be a gap in their health insurance coverage, and the employee may need to elect COBRA to avoid a gap in their coverage. So determinations for the short-term disability benefits can be made by you, the employer, or it can be made by the medical board. You, as the employer or the member, can provide the application for disability. So for the employer to make the determination, a Form 701, which is the application for short-term benefits that the employee will complete, is required. A Form 703, which provides the monthly doctor certifications. It also provides any earnings that the employee would have earned during that month. And also there is a 7A. So the employer, you also can request a medical report form, which is a 7A that the member and their doctor would complete. Now, if the determination is made by the medical board, either again, you, the employer, or the member can request our medical board to make that determination. A Form 701, which is the application for DIPNC benefits, is required. All right, so the forms that's required for our medical board to make a determination, the application for short-term 701, a Form 700, which is provided by you, the employer, the Form 703s, which is the determination for the earnings and also the monthly doctor certification. There's also a Form 7A, which is for the medical board. Along with Form 7A, the employee will also, or the physician will provide documentation that is current within 6 months. And the employer also will provide a job description for the determination as well for the employee. So during the medical board determinations, the employee will receive either an approval letter or they will receive a rejection letter. The employer is also copied on the determination letters that we mail to the employee. So if the member receives a rejection letter, the member has 90 days to submit the additional information. So the medical board may request additional medical documentation that was not previously supplied by the member. When additional information is received, the file will go before the medical board for review. If the additional medical information is not received within 90 days of the rejection letter, there's going to have to be a whole new application process will begin. So sometimes employees may opt to end their short-term disability for whatever reason. They could go out, there may be decided to go ahead and retire. They are going to terminate employment. They also may opt to end their short-term disability due to a refund. So they may want to go ahead and cease employment and go ahead and take a refund of their retirement contributions. So if they're going to do a refund, there is a Form 5 that the employee would complete requesting a refund. The employer pays short-term through the date that the member would sign the Form 5. Or sometime the employee may go back to work. So they're going to return to service full time. So the members return as a contributing member to the retirement system. And then the employer also will pay short-term up to the date that the member returned to active service. Now, if the employee is going to apply for retirement benefits, there is a waiver letter that the employee would complete for our office. They are waiving any future disability benefits offered through DIPNC. If the member is requesting a refund of their contributions, a waiver is no longer required for a refund. In the past, we would ask for employees to sign a waiver for a refund and retirement, but currently it's only for retirement purposes now. So sometimes a member can, their disability may be more of a permanent nature. Instead of a short-term period, the employee can also request or make application for preliminary long-term instead of short-term disability. Preliminary long-term is still considered under the short-term period. Their physician or doctor is stating that their disability is more on a permanent basis, and their disability would last for more than 365 days. Under the preliminary long-term, the application would have to be approved by our medical board, so it would go before the medical board for approval. The employee would no longer submit a 703 for the doctor certification, so they would continue to submit the 703s for the earnings, but the doctor would not have to certify their disability on a monthly basis as they would have under the regular short-term disability. So it's important to note that preliminary long-term does not automatically qualify the employee for short-term disability, for long-term disability. So the employee would still have to make application after the short-term period ends if the disability is on a permanent basis for long-term disability. Preliminary long-term simply means that the medical board viewed the disability is likely to last for a full 365 days of the short-term period. So it's also important to note that the member can make application for long-term disability within 90 days before the conclusion of their short-term period. And that's important because we know, like from previous slides, that the health insurance piece, there's no longer a retro enrollment for health insurance. So 90 days before the short-term period is up, the employee can request for long-term disability if they meet the requirements for long-term. So the application for long-term disability, there's a Form 701. So it's the same form that the employee would use to apply for short-term, On that Form 701, the employee would either check short-term or they will check preliminary long-term for application. The 700, so some of the same forms as the employee would, or you and the employer would complete for short-term is also completed for preliminary long-term. The Form 703 is also required. The medical report, 7A, along with support and documentation, that's 6 months from, that's current, 6 months from the application request. And the employer also would provide a job description to our office. All right, so let's talk about the payments for the short-term period. 50% of the annual salary is paid under short-term. At the time of short-term payments, you're gonna consider any type of local supplements and also longevity benefits. The short-term payments will not include overtime or bonuses. The maximum payment under short-term is $3,000 per month. Now, when you're trying to determine that daily rate, the benefit is going to be calculated using the actual days of the month. I know prior we used 30 days, but you're going to look at the actual days of the month when you're trying to calculate the daily rate for the short-term period. So COLAs for DIPNC is also granted as they would for state employees, so the same COLA would apply. A complete Form 711 is used in order to calculate the monthly and daily rate. So you as an employer would use the Form 711 to help you calculate the daily rate to pay that member. So what defines the base rate of compensation? It's defined as regular monthly compensation. It does not include pay for shift premiums, overtime, extraordinary pay, or earned for service as an employee or a teacher for full-time work. So again, the Form 711 is used to establish the salary calculation. And the employer, you should be reviewing or consider the following: the monthly amount of pay on the employer payroll, any supplements granted, and the amount of service which the longevity pay is based upon. So this is the Form 711 that is used to help you as an employer to determine that daily rate and the short-term benefit amount. So calculating the cost of living adjustment. So sometimes if the General Assembly, if they grant a cost of living adjustment, again, that's going to be applied to the short-term disability benefit. So this is across the board percentage. Example for John Smith. Their John Smith short-term period, March 21st, 2017 through the 20th of 2018. There was a percentage increase. So the salary and the supplement is also increased by the percentage that was granted. Longevity is based on the adjusted salary. So John Smith, let's look at this example. There was a 2% COLA. John Smith's salary was $26,520. John Smith don't have a supplement. John Smith also qualifies for longevity payments. So he receives 1.5% of longevity payments based on his years of service. So when we add 26,520 plus 397, the longevity, John Smith's adjusted salary is $26,917.80. The monthly salary divided, the 26,917 divided by 12, $2,243.15. 50% of the $2,243 is $1,121.58. John Smith's daily rate, the 1,121.58 daily rate is $36.18. So sometimes the General Assembly will also grant a flat rate increase. So they may give a $1,000 increase, whatever that flat rate would be. So again, John Smith salary after the $1,000 increase, $27,000. The supplement does not get increased under a flat rate. So the supplement was still $508. This employee also has longevity payments, 1.5% of the $27,405. When we add those up, John Smith's annual salary, $27,913, divided by 12, $2,326.08. 1/2, 50% of the $2326, $1,163.04. Their daily rate, $37.52 a day. So short-term disabilities is also subject to federal and North Carolina income tax. Now, if an employee was Bailey vested, which means they maintained 5 years of service as of August 12th of 1989, the short-term benefit will not be subject to North Carolina income tax. So they will be exempt from NC state tax if they met the Bailey exemption. Now, during the short-term disability period, FICA tax is also deducted. Now, if the member last worked on January 16 and is also leave through August, the first month following the last day on the job is still February. 6 months from the last day work beginning in February is July. So February through July would be a full 6 months. Now, the Internal Revenue Code states that sick pay short-term benefits is subject to FICA tax if paid during the 6 months period beginning the calendar month after the calendar month that the employee last worked. So the first month of short-term payments will likely be subject to FICA tax, take into account the 60-day wait period. If the short-term benefits are paid after the 6-month period, even if paid retroactively, they are not subject to FICA tax. Leave pay in lieu of short-term benefits is not FICA tax exempt. So FICA tax will come out of any type of exhaustion of leave pay. So short-term benefits can also be reduced by temporary total or temporary partial workers' comp. Worker comp's payments is 66 2/3 of the employee's pay. Short-term benefits can also be offset or reduced by VA benefits if it's for the same benefit, same disability or related disability. There is an offset of the short-term payments. Short-term benefits can also be reduced by excess earnings. So in lieu of short-term benefits, the member may elect to exhaust any type of leave, sick leave, vacation, or bonus leave. The member can also use share leave that was provided by the employer if the member has not received any short-term benefits. Any exhaustion of leave will not extend the short-term period of 365 days. So pretty much with this slide, I was talking about the exhaustion of leave. So there is a leave pay is in lieu of the short-term benefits. So you can't receive short-term payments and also get the leave pay. So members can also use leave to supplement the workers' comp. So you can use that to make the salary whole, because we see that workers' comp pays 66 2/3. There's also can sometimes be a lump sum payout of leave, vacation, and we treat that payout of the lump sum payout as if the member exhausted that on a day-to-day basis before the short-term benefits can be paid. Also, just looking at this, leave pay under if the employee is exhausting leave during the workers' comp period, that leave pay is not reported through payroll report. So that's also important to note. So you wouldn't report that exhaustion of leave pay while the member was receiving workers' comp to make their salary whole. So during the period if an employee is receiving workers' compensation, we recommend that the member make application for short-term. The forms for the short-term is also during the workers' comp, the same forms will be required, the application, the 701, 703, 700. So during the workers' comp, the member does not receive non-contributory service credit for the short-term period when in receipt of workers' comp. The member may apply to purchase workers' comp if they return to service or if they are approved for long-term. So workers' comp, the employee will not get non-contributory service, but we do recommend that the employee go ahead and make the application for short-term. So in the event, if they need to apply for it, go from short-term to extended short-term, or if they may need to apply for long-term. So short-term is the first period, the first phase of the disability benefits. So they have to begin with short-term. So go ahead and apply for the short-term benefits, even if the employee is receiving workers' comp. So in order to grant non-contributory credits for short-term disability, a member must be in receipt of a short-term disability benefit. The member is also eligible for the death benefit when in receipt of workers' comp benefits throughout the entire short-term period, even if the member did not apply for short-term disability benefits. And this became effective January 9th of 2017. So workers' short-term benefits are offset by temporary total compensation until there is an agreement that is reached. The short-term benefits will not offset for permanent partial workers' comp benefits. So short-term benefits can also be offset by VA benefits if the disability is the same disability or if it's a related disability. The employee will provide a copy of their VA awards letter. So the awards letter should have a line item that shows the disability and the amount that they're receiving for each disability. If the VA benefit is granted for more than one disability, the DIPNC states that the employer should only offset for the same disability that the member is receiving the short-term payments under. So during the short-term period, the member can work, but there is an earnable allowance. Members are allowed to have earnings from up to during the short-term periods. These earnings is from any source, so there's an earnable allowance for any source of income counted against their monthly allowance. Earnings up to the amount of the gross short-term benefit is established on the Form 711. If the earnings exceed the amount of the monthly earnable allowance, the short-term benefit is reduced by a dollar for dollar. So let's consider John Smith in this next example. The monthly compensation for John Smith was $2,243. We subtract the short-term monthly benefit, $1,121. John Smith is allowed to earn up to $1,121.57 on a monthly basis. So there is a monthly earnable allowance. So again, on the Form 703, the employee will report any type of earnings on Form 703. So in this slide shows the earnings that John Smith had. So in August, John Smith's earnings was $1,900. Again, John Smith's earnable allowance was $1,121.57. John Smith had an overpayment of $778, so he went over his earnable allowance by $778. So the employer should deduct the $778.43 from the short-term benefit. So John Smith's August payment should be $343.15. So in September, John Smith earned $2,500. Their earnable allowance again was $1,121.57. September, there is an overpayment of $1,378. So the overage for September, John Smith wouldn't receive any payment for the month of September because they exceeded their short-term benefit amount. October, John Smith earned $1,125 per month. The earnable allowance again was $1,121.57. There is an overpayment of $3.43. So for October, the employer would deduct $3.43 from out of the short-term benefit of $1,121. October's payment, short-term payment, would have been $1,118.15. So during the short-term period, an employee also can return to work under trial rehabilitation. Trial rehabilitation is considered to returning to work in the same capacity prior to the date of disability. Trial rehab cannot continue for more than 40 days, 40 continuous days. During the trial rehab period, the member will not be paid short-term disability benefits. 6% of retirement contributions is also withheld from out of the member's wages that they went back to work. If the member returned to service for 40 consecutive days or less, the short-term period will continue. So it has to be less than 40 days. Trial rehab of 40 consecutive days will not extend the 365-day short-term period. Now, if the employee went back to work for more than 40 continuous days of trial rehab, they have to make an application for short-term disability again. So they will start the process all over. A weekend or holiday will not interrupt the 40 consecutive days of trial rehab. So sometimes we get questions from employers wanting to know if the employee went back to work under trial rehab or should they consider that earnable allowance. So let's look at the difference. So any period of employment with a reduced schedule and or duty restrictions will be subject to the monthly earnable allowance. So that's how you should determine if it's trial rehab or if it's under earnable allowance, if the employee had a reduced schedule or any type of duty restrictions. The member also will have the member will still be eligible for short-term benefits benefits under the earnable allowance, the earnable restriction, but the 6% is not withheld from out of those wages under the earnable. So periods of trial rehab should be reviewed on a daily basis. So you have to look at a daily basis to see what the employee was performing, how many hours they worked, their duty. So trial rehab should be a daily test to see if the member qualified for trial rehab or if the employee was working under an earnable allowance. So reimbursement of the short-term period due to a law change that amends General Statute 135-105. The retirement systems effective July 1st will no longer provide reimbursement for the second 6 periods of short-term benefits. Now for short-term benefits that began prior to July 1st of 2019, the employer can still request reimbursement of short-term benefits for the second 6 months of the short-term period. The employer cannot request reimbursement until all the short-term payments have been made to the employee. The employer cannot reimburse beyond the date the physician signed the final 703 unless a member was approved for a preliminary long-term, extended long-term, or long-term disability benefits. So members will not receive non-contributory service unless the retirement systems receives all required forms to grant service to the employee. So the forms again that's required will be the 714, 711, the 703, 701, the 700, and the job description. So pretty much all the forms is required for us to grant service to the employee. If the short-term disability payments do not extend into the second 6 months, there is no reimbursement made to the employer. However, the employer still needs to submit the forms in order for the employee to receive the service. The employer must request non-contributory service credits for any period that the short-term was paid. So regardless if the short-term went into the second 6 months, still provide all those forms so that the employee can receive service for those months that they were receiving short-term disability benefits. So this form is the form that you as an employer would complete to request reimbursement for the second 6 months or to request non-contributory service to be granted to your employee. So this pretty much just go over what we just saw, the required forms that the employer that you would send to the retirement systems. So during the reimbursement process, we established the short-term dates. You're also going to establish the first and second 6 months periods. Also, we are going to establish the reimbursement dates and the amount of reimbursement to pay. So let's look at John Smith. John Smith last workday was January 16th. The doctor certified the disability January 21st. John Smith exhausted leave through March 4th. The date of disability, January 21st. John Smith's 60-day wait period was the 21st of January through March 21st. The short-term period was from March 22nd, 2017 through March 21st of 2018. John Smith's first 6 months period was from March 22nd, August of 2017 through September 21st. Through August 21st of 2017 was the first 6 months. The second 6 months of John Smith's short-term period is reimbursable. So September 22nd, 2017 through March 21st of 2017 would be the period for reimbursement for you, the employer. So establish a dates for the first and second 6-month period. The first 6 months period, March 22nd through September 22nd, 21st to 2017. The second 6 months period is reimbursable September 22nd, 2017 through March 21st of 2017. So the first day of the second 6 period, September 22nd, 2017. So here we're just looking at how you as the employer would calculate the reimbursement amount. So there are 21 days in September 2017 that are not eligible for reimbursement. So those days are part of the first 6-month period. So you multiply the 21 days by the daily rate. So 36.18 times 21, $759.78. We subtract that $759.78 from the short-term benefit amount. So $361.80 from the first period. So first month September of the second 6-month period, $361.80. The full month of the second 6-month period, October through February. So the short term, $1,121.58 times 5. So the amount, $5,607.90. Then there was a partial month of reimbursement for the 21 days from March that is due. So the total reimbursement due to the employer, so the $361.80, that was the first month of the second 6-month period, plus the $5,607.90. That was the full the second 6 months full period from October through February, plus the partial month from March 2017. So total amount that is reimbursable, reimbursed to the employer, $6,729.48. So health plan coverage can also be reimbursed if the disability lasts for 365 days. The employer may request reimbursement of the health plan premiums that was paid during the second 6 months of the short-term period. It's not necessary to prorate any portion of the health plan premiums during the second 6 months. So reimbursement for health insurance will be for the 6 full months premiums cost, provided the short-term period continue for 365 days. So again, there's an exception of the 365 days. So if the employee died during the last month of the short-term period, the full reimbursement amount, health insurance premium is reimbursed. Or if the employee retires the first of the month following the short-term period. So if the disability lasts less than 365 days, the health plan coverage is reimbursed based on the different dates that of the short-term period. So if the second 6 months of the short-term period began between the 1st and the 5th and the 14th of the month, we're going to calculate the reimbursement for premiums paid that month. So for example, the second 6 months began March 14th. We will reimburse the April premium, which was paid in March. So through the 1st and the 14th. If the second 6 months of short term was between the 15th and the 31st of the calendar month, we're going to calculate the reimbursement for the premium paid the following month. So example, the second 6 months beginning March 16th, we're going to reimburse May's premium that was paid in April. So the member can return, if the member returns to work on January 24th, 2017, the health plan premium is paid 1 month in advance. So let's look at the short-term dates, March 22nd, 2017 through March 21st, 2018. The first 6 months period, March 22nd, 2017 through September 21st of 2017. That's the first 6 months. The second 6 month period was September 22nd, 2017 through March 21st, 2018. So the reimbursement is made to the employer to cover the period from September 22nd, 2017 through January 24th. The reimbursement will be for premiums paid for October through January coverage. So if the second 6 months began September 22nd, 2017, the first eligible premium for reimbursement is November. That was paid in October. So if the member returns to work January 24th, 2018, the last eligible premium for reimbursement is February. That was paid in January. All right, so in this example, the disability lasts less than 365 days. The member returned to work on January 10th of 2018. The short-term period, March 22nd through March 21st of 2018. So the 22nd of 2017 through March 21st of 2018. The first 6 months period was March 22nd, 2017 through September 21st of 2017. So that's the first 6 months. The second 6 month period is from September 22nd of 2017 through March 21st of 2018. So the reimbursement made to the employer will cover the time period from September 22nd of 2017 through January 10th of 2018. So the premiums reimbursed was for October through December. If the second 6 months began September 22nd, 2017, the first eligible premium for reimbursement is November. That was paid in October. So the member returns to work January 10th of 2018. The last eligible premium for reimbursement is January. That was paid in December. So any underpayment made to the member, if it's less than $200, the retirement systems will only reimburse the employer the amount that was paid, not the amount due. The retirement systems will not reimburse the employer if the underpayment to the member is greater than $200. The employer must pay the member the amount due and then provide proof of the payment to the retirement systems along with a copy of the check or revised 711. So for an overpayment that the employer makes to the employee, the retirement systems will only reimburse the amount that was paid, not the amount that was due. Not the, to the employer, the amount due, excuse me, not the amount actually paid. The employer will be responsible for requesting any overpayment from the member or the employee. So it's also important to know for the retirement systems will calculate both the first and second 6 month periods of the short term to make sure that the employee was paid correctly. So we also will go back and review your forms and that was provided to us. Underpayments and overpayments in both the 6 month periods are combined to establish the amount for the underpayment or overpayment. The employer will be advised in writing of any necessary adjustments that would need to be made. So now we're getting into the extended short-term period. So application for extended short-term can be made 90 days before the short-term period has ended. So the employee can apply for extended short-term. The application the employee must complete 365 days of short-term disability benefits before extended short-term can begin. Extended short-term is also paid for up to 365 days. For extended short-term, the disability, again, is temporary, and also the employee disability continues to be a temporary condition. The benefit also is approved by the medical board. The first day of the extended short-term disability is the day following the last day of the short-term disability. There's not a wait period for extended short-term. The employee can be approved for up to 365 days. So extended short-term is also paid up to 365 days. If approved, they may request an extension from the medical board. So sometimes, from time to time, we see here if the employee is approved for extended short-term, sometimes the medical board may approve it for 5 months. So, and then they're still considered disabled, temporary disabled. The employee can contact our office again and request for the remaining months of the extended short-term period to be approved. So that happens from time to time as well. So the application for extended short-term is Form 704. Again, there is a medical report form that the employee would provide to our office, Form 7A, also along with current medical documentation. So supporting medical documentation has to be current. So the information, the medical documentation must be within 6 months of the application. We also require copies of all the short-term forms that the employee would have and the employer would have completed, along with a job description. So in lieu of extended short-term, the employee can also exhaust leave. The election of the exhaustion of leave will not extend to 365 days of the extended short-term period. So the election of exhaustion of leave is in lieu of the short-term benefits. So as it is under short-term, if the employee is exhausting leave under the extended short-term period, they won't receive an extended short-term disability benefit. An election to receive a lump sum payout for leave is also treated as if the leave had exhausted on a day-to-day basis. So extended short-term payments, again, is paid 50% of the annual salary. That's also going to include local supplements and longevity. It will not include overtime bonuses and shift differential. Eligible for disability income plan cost of living adjustments is also granted. The maximum benefit under extended is $3,000. Under extended short term, there's also offsets, temporary workers' compensation, VA benefits also will offset if it's for the same or related disability. And any excess earnings will also offset the extended short-term benefit. So during the extended short-term period, the employee will provide the Retirement System Division at Form 707 that will outline their earnings. So gross earnings up to the amount of the extended short-term benefit is permitted. If the earnings exceed the amount of their extended short-term benefit, the benefit is reduced by dollar for dollar. Earnable allowance can be requested by the member to the retirement system, so they can always contact us and we can provide their monthly earnable allowance. So let's look at how we calculate their earnings. Earnable allowance, this employee's monthly benefit as an active employee, $2,200. Their extended short term is 50% of the $2,200, $1,100. This employee is allowed to earn up to $1,100 per month. So each year, the employee will provide a yearly statement of income that will report their earnings that they received from the prior year. So employee also can return to work during the extended short-term period, trial rehabilitation. So during the extended short-term period, trial rehabilitation is also determined as returning to work in the same capacity, during the same job, same duties, same hours. The trial rehab cannot exceed 40 continuous work days. Weekends and holidays will not interrupt the 40 consecutive days. The trial rehab will not extend the extended short-term period. The employee can also have more than one trial rehab period, so they can go back for 5 days, go back again 5 days again throughout the extended short-term period. During trial rehab, the employee will contribute to the retirement system and receive contributory service credits. So 6% is taken out of their wages under trial rehab, and the employee gets service credit. So let's look at this example, scenario 1. Jeff Smith was approved for extended short term on September 1st. His employer allowed him to return to work on Monday, December 4th. He returned to work in the same capacity and worked 8 hours on December 4th. He continued to work 8 hours per day, Monday through Friday, until January 15th. On January 15th, Jeff is unable to continue to work. He does not have any leave to exhaust. Is Jeff eligible to continue with extended short-term benefits? On January 30th, Jeff returns to full-time employment. How should the employer treat this day of return to work? So looking at this example, Jeff did not work for more than, so he went out on short-term, extended short-term, September 1st. He went back to work on December the 4th. He worked from December the 4th through January the 15th. So he did not work for more 40 continuous days. So he can continue with the extended short-term benefits. On January 30th, Jeff returns to full-time employment, went back to full-time employment on January 30th. How should the employer treat this day of return to work? So in this scenario, I think that the employer should treat the full-time return to work under trial rehab. So again, the contributions will come out as long as Jeff don't work more than 40 continuous days. Then if he became disabled again, then the extended short-term period will just continue on. So scenario 1, explanation of scenario 1. For each day that Jeff worked In the same capacity at full schedule, his employer should report the salary and contributions. The employer should call the division immediately to advise a member return to work so that we don't overpay the member. As a result, Jeff will earn contributory service for December and January. The retirement systems will pay extended short-term benefits for the days in which Jeffrey did not work or is lost leave. If he exceeds 40 consecutive days, then the disability application would begin the new process. So during extended short-term, the employee can request a refund of contributions. They can receive a refund of their retirement contributions if the following apply: the short-term or extended short-term period has ceased and the member has not returned to work. The member is no longer disabled as determined by a medical board. The benefits are suspended. The member completes Form 5 for an application for a refund. So an employee can also apply for retirement as soon as they're eligible to retire. The member does not have to receive extended short-term benefits for the full 365 days to apply to make application for retirement. If applying while in receipt of extended short-term, the employee must request the benefit to stop. They will complete a Form 6 for retirement. Services will include contributory membership service, unused sick leave, purchases, and non-contributory service. A waiver is also required. So if a member requests retirement during the extended short-term period, then they will waive their rights. So during the extended short-term benefits, the termination of benefits will occur if the member returned to contributory membership, if they exceed their earnable allowance, the medical board rejects their application, the member can request the termination of benefits, or if the doctor determined that the employee condition is permanent, they can make an application for long-term if they meet the eligibility for long-term disability benefits of 5 years of service. All right, so information that is available: the active employee online resources, www.myncretirement. There's the employer handbook available for you to view the information regarding DIPNC benefits. There's also frequently asked questions for the disability, which I think is very helpful to print out because it shows like the different phases of the disability income plan of North Carolina, and it also shows the required forms under the frequently asked questions handouts available. There's also information on returning to work, and any news and legislative updates is available at our website. Employer online resources available. You can look and see upcoming events, information on Orbit employer reporting. There's DIPNC processing and trainings, upcoming event schedules. There's information if you're interested in learning, you've had questions regarding DSRs, discontinued service retirements, and other guidance publications available at our website. So as an employer, you can access the employee database, review the service available in salary and history and contribution histories. If you have questions regarding how to access the employee database, reach out to your Orbit employer report payroll person, or you can email for assistance. That's oer@nctreasurer.com for assistance. The retirement systems, we can be reached at 1-877-627-3287, where you can send your request via email, nc.retirement@nctreasurer.com. Employer payroll report, if you have questions regarding how to report or any type of questions how to access information, oer@nctreasurer.com. Again, our website, www.myncretirement.com. We're located 3200 Atlantic Avenue in Raleigh, North Carolina, Department of State Treasurer, 27604. So this includes my part of the presentation. We're going to bring Margaret Hendershot so she can discuss with us how our supplemental retirement accounts work with our members that are out under receiving disability income plans benefits. Thank you so much for attending.
We're going to take a moment now just to review with our in-person audience some of the questions that were asked online. One was how does one determine eligibility for short-term disability? There is a updated general statute. It updated 135-105, the chapter on short-term disability, that limits the time period for application for DIPNC, Disability Income Plan of North Carolina, short-term disability benefits to no longer than 365 days following the last day of the waiting period. The member must provide medical documentation to prove disability occurred on or prior to the last day of work or exhausted leave. So that is a change. There used to be no statute of limitations on applying for short-term. That is no longer the case. And there was one other one here. I did add a handout for what is compensation. And then we have a question, what is an example of excess earnings? The answer to that, of course, would be overtime. Or if they're working a part-time position in addition to a full-time job, the salary of, say, a bus driver who's actually a cafeteria worker, and they're two separate positions. One is full-time and the other would be just a supplemental income situation. That supplemental income would not be included in the base rate for short-term. Again, I mentioned overtime. The short-term monthly benefit amount is determined using the annual base rate of compensation as of the last day of full-time employee worked or exhausted leave in his or her usual occupation. I believe those are the highlights of some of the questions that we did ask. We are going to send you a copy of or a link to the recording of this seminar that'll arrive sometime tomorrow. Please share that with other HBR people in your organization that might benefit from this information. And of course, if you'd like to print off the handouts, you'll need to do that prior to the conclusion of this webinar. So right now we're going to take a 10-minute break and we're going to come back with Margaret. She does have some very important information concerning the 401, 457, 403B plans and what options might be available to your members on short-term or extended short-term disability. So again, we will come back at approximately 10:40 a.m. Eastern Standard Time.
Hello, everyone. Thank you so much for your attendance today. My name is Margaret Hendershot, and I'm a retirement education counselor. I have such a wonderful position. I'm here at the Treasurer's Office, and I oftentimes get a chance to talk to pre-retirees about, planning for retirement. But as can be the case, certainly given our discussion today, some folks are necessarily kind of forced to consider short-term disability or not being able to continue to work. And so I think what they thought would be helpful is, let's just talk a little bit about the 401k, the 457, 403b retirement plans, in the context of our discussion today with members that are going to be sitting in front of you and talking about necessarily what their options are. So know in general, the 401k, the 457, the 403b plans, they're called defined contribution plans, but they're also referred to as qualified plans. And the reason I tell you that is that qualifications means there's certain kinds of things and eligibilities that they have to be able to meet in order to be able to have access to the benefits. And so probably one of the biggest challenges for your folks in disability is that retirement plans by their very nature are really geared for retirement and not many other uses. Okay, so I'll be more clear as we go throughout the presentation, but more specifically, there is certain kinds of eligibility requirements for your general population as well as individuals that are trying to see what assets they can use during disability, and that is in short-term, long-term disability, and what are those kind of options that you might be able to kind of direct them to. So we are going to get started, and we're not going to be very, very long this morning, but I think it might be helpful for you since you will indeed be faced with some of these things as folks try to figure out what they need to do. For the most part, when we talk about a general discussion with these plans, we talk about how people might have envisioned their retirement. Obviously, your folks in disability indeed are not thinking about necessarily long-term goals. They're trying to figure out how to make things happen, within the day. But I will tell you that as employers, I want to let you know that each of your plans, each of your entities, we call them sub-plans just because, hey, the 401k is the 401k for everybody. So whether you're here at the Treasurer's Office or whether you're at a school system, it's the same 401k, but a different sub-plan, different entity. What kinds of things necessarily would you want to consider about your entity? And one of those things is that we can actually kind of look at the sub-plans to say, how are you guys doing? How is everybody, ready for retirement? Are your folks participating? So if you're not necessarily familiar with your retirement education counselor assigned to your entity, I certainly want to encourage you to do that. We are indeed a resource for you and support for you as employer as you kind of look at your plans, and we can help you in terms of the management of those plans as well. So, in general, the retirement system, financial experts, they really want your folks at retirement to be able to replace 80% of their current income. 80% of their current income. And so how are they necessarily going to be able to do that? And so helping them to know the tools that are available to make sure that they're on track. Your sub-plan has readiness numbers too. So each of you, community colleges, any of our entities, we can actually tell you, hey, so what certain amount of percentage of your people are on track to be able to replace their income at 80%. How great is that, right? So if you're interested, certainly, reach out to us at any time. So tools there in terms of by sub-plan. Where's money going to come from? Obviously, now we are talking about retirement in general, but in general, when you talk about how all those pieces are going to come together to provide that 80%, you are looking at the pension plan, one of the best in the country, ranked 5th. One can't say how good her plan is, but it's just wonderful in terms of, the ability to pay. Social Security, and for some of your disability folks, that might be something in their future as well, in terms of any savings that they might have put away. So that any kind of monies put away for the future just allows people more choice. And so this is just to kind of let you know, these are the sources of income we anticipate then in retirement. I would say to you, probably the biggest misconception for most people, and that includes the pre-retirees that we chat with, that is that just because they've reached eligibility for a pension benefit, that they necessarily can live on that money. So I would say to you, it's about really having assets, not necessarily about getting to certain ages. I will tell you too that we don't tend to necessarily anticipate how long we're going to be in retirement. And in general, for most of your general employees, they're anywhere between 20 and 30 years in retirement. How great is that, right? We're living longer. But what that means too is that your money has to necessarily be available for you, throughout all of your years in retirement. So I guess one of the things, obviously, with individuals necessarily in general, and not necessarily, specifically talking about our folks with disability, going on disability, obviously, we want people to take charge of their retirement. We want to make sure that they are planning for retirement at any stage of their life in terms of the folks that you deal with. And of course, then getting enrolled into the plan is something that maybe they would approach you in terms of your new hire orientation. Well, we have tools available for you. The retirement system, oh my goodness, they've redone some of the tools that they have available for you as well in terms of welcome kits. So I know a lot of folks are necessarily going to more of a condensed enrollment packet, easy enrollment cards, highlight type flyers. I think gone are the days of the big books that we used to provide, if you recall, right? The big books that had all the stuff in it, which is almost too much information. If indeed you're not set up for online enrollment, that might be something you can reach out to your retirement education counselor as well. That say, hey, I really am interested in that. And that's really just a payroll fee. If all of your stuff is online now, and that seems to be the trend, certainly reach out and let us know how we can help you there in terms of making that enrollment status. Too, we all love to talk, and we would be more than happy to come and talk to your new hires as well. Sometimes it's more of a face-to-face thing in terms of they're there, they have questions. Hey, even if it's only a modest time frame, the answer is let us know how we can help you. So either forms, access online, certainly any assistance that we can provide for you in terms of enrollment. Now, we're not going to discuss investments in terms of allocate investments, but I will tell you, out of sight, out of mind, there's investment help for folks to get into the plan. All the investments managed by a board of trustees, the financial advisors here at the treasurer's office, and there is indeed oversight, for all the investment options. So if folks don't want to pick their own, they actually do indeed have investment help, and that's actually called Goalmaker. Folks can actually consolidate their plans, and certainly for some of your folks in retirement, this can help them to either buy time and or transfer benefit. So consolidating assets really just means kind of getting everything together to necessarily maybe give them more buying power. I will tell you that increasing contributions regularly, I think folks would be surprised that by just putting little bits away, they're going to have so much more money in retirement. And I mean little bits. Every year, go up another 1%. Every year, add another $10 per pay. And in the end, you necessarily thousands more, because we certainly want to make sure you have enough money in retirement. Those of us over 50 can actually put in more money into the plan. So just know catch-up provisions are available for folks, not only with the 401k and the 457, this year the maximum up to $25,000. So quite a bit of flexibility there. That tends to come in play when you're talking to your pre-retirees, talking about their final payouts, unused vacation, bonus, and longevity that they want to go ahead and defer. Then all of a sudden the maximums have a little bit more of a meaning. Alrighty, so we talked about necessarily enrollment in terms of overall, but really I think our point of our discussion today is talk a little bit about the differences of the two plans, and then what's going to happen with your folks, certainly then as they're still employed, and necessarily then once they actually maybe do separate service and or retire. So the bigger differences between the 401k and the 457 are really the first and last, meaning who can participate and then what happens when people leave. So eligibility for participation in the 401k is for full-time contributing members only, right? Full-time contributing members only. And for the 457, that is not the case. Anybody receiving W-2 income, and I'm sure you've seen this in your entities as well, that you'll see return to work retirees, or maybe if you're in state government, you might see local government folks, come over. So 457 is definitely a lot more flexible when it comes to eligibility. Catch-up just means there's a lot of provisions available in terms of being able to contribute to the funds. I think our focus today is a little bit more on, okay, so what kind of access do our folks on disability actually have in the plan? So when we say 401k, the North Carolina 401k, there are several options available for individuals that are indeed short-term disability. Now, I will indeed caution you, short-term disability, as you know, they're not necessarily working, but from our perspective, are still considered active. And I hope you kind of know what I mean by that, in that they are not still getting paid by you, right? So they are still considered active, and that truly is their pickle, because active employees only have limited access to the qualified plans. Loans are not something they can take out because they are not getting their wages. They're getting their short-term disability. So that is not an option for them. Now, hardship withdrawals are indeed available, but you have to have a hardship. And so just to be clear, there's only a handful of hardships offered per plan. For the 401k, it's called hardship. For the 457, it's called unforeseen emergencies. And what that means is, and I'll give you a good example, maybe medical expenses over a certain amount, would qualify for a hardship, but you obviously have to be in that situation to be able to necessarily have access to these funds. If indeed they just needed to, repair the car or those kinds of things, that is not a hardship. I know it would indeed create issues for them, but a hardship is very, very specific rules. I know. Withdrawals while working. So as we had mentioned, our active folks even on short-term disability, as long as they're age 59 and a half, they would be able to take what's called an in-service withdrawal. They're still in service. In service means they're still working. Now they're still active, okay, for clarification, they're still active. For the 457 in-service withdrawals, not until 70 and a half. Okay, so that kind of gives you a little bit of a summary. I will indeed say for the 457, there's a unique rule that just says, hey, if your folks have not contributed for several years, for at least 2 years, they've not contributed, and they have less than $5,000 in the 457 plan, they can take out what's called a de minimis contribution. They can indeed take out de minimis distribution. So that's a unique rule, and that may qualify then for some of your folks as well. But do know that truly that is it in terms of availability. Now, should they separate service from you, then it's just like the general population as well. 401k in particular is tied to a certain age. You have to separate service in the year you turn age 55 to be able to avoid a 10% penalty. Okay, so you have to separate service in the year you turn age 55 to avoid a penalty. Now, I know many of our employers on the call today may indeed have law enforcement officers, EMS, and maybe fire folks as well. They do qualify under a separate provision that was changed in 2016, that as long as they separate service in the year they turn age 50, that's 50, okay, and they would avoid a penalty. Now we have folks here all the time that retire with 30 years of service, and they're 48 or they're 51. Yay, they've got another whole life ahead of them, but they don't have access to their 401k without penalty. If you separate service prior to the year 55, then you have to wait until 59 and a half in order to avoid a penalty. Okay, so this is separate service now, so you're no longer in active employment, and that's in government employment of any sort. Now the 457 says when you separate service, and this is the big claim to fame for 457, there is never a withdrawal penalty. So 457 assets that they have available to them after separating service would be available to them immediately. Now, there's no penalty, but certainly just know that pre-tax contributions, when you save pre-tax contributions, will be taxable on distribution. And we're going to talk about that in just a minute. This is basically just to say pre-tax contributions indeed provide your folks the opportunity to be able to save a little bit more in their plans and not cost them as much because it reduces their taxable income today. Reducing taxable income today, we say this is the tax help for today. Now, when people are distributing money, when people are taking money out, right, separated service, people that are no longer in your employment, the retirees, if they've saved pre-tax, it'll be taxed when they take it out. I've had people ask me, how old do I have to be before I don't pay taxes? I'm like, oh, I'm so sorry. You'll always pay taxes if you haven't paid taxes when you saved it. Okay, it's just another way to say that, kind of talk about saving taxes with pre-tax contributions. There's also tax deductions and things, and if you contribute to a plan. After-tax raw contributions are certainly available within each of your plans. So these are just ways to put money into the plans, and this just means you paid it from your net pay. So it comes out of your net pay, you've paid taxes on your contribution, and then it grows tax-free forever. You do have to be 59 and a half, and 59 and a half is kind of like a magic age in this world. You do have to own the first contribution for 5 years. Alrighty, so in terms of tax help now, tax help later, it's helpful for you to know, as you'll have most of your folks just in that savings world, but it certainly then will affect them certainly in the retiree world or separating service world as well. I will, just so I don't forget this, I do want to mention to you, there are some handouts on the webinar over to the right-hand side. If you look at your box, it says handouts. One of the handouts there is so helpful for employers. It's like a cheat sheet. And I know it's in font size 6, so I apologize for that. But it's got 401k, 457, 403b plans all side by side in terms of all the things that make them unique. Okay, so I just didn't want to forget. If you need that electronically, I can get that to you as well. You can always download it here and save it. Okay. Alrighty. We are not going to be talking about investment options, given necessarily that folks might necessarily be separating service or retiring. It's just helpful for you to know necessarily that there is indeed help for them in terms of the Goalmaker product as well. So we certainly want to encourage your folks to get involved with the plans if they're not already. Know that you've got lots of tools available for you in terms of, as employers. In terms of actually beneficiary information, I can't stress enough that really that is indeed an out of sight, out of mind thing. So here's a couple of tools for you, to let your folks know. If Gwen and I are meeting with the same person talking about retirement, right? And they go, oh, Margaret, I don't need to do my beneficiaries. I already talked to Gwen about that. We got that all settled. The misconception is that if you change beneficiaries for the pension plan, that it changes necessarily the beneficiaries for your 401k, and it does not. All of these plans have beneficiaries of their own. So we always take the opportunity to talk to folks about their beneficiaries because they might have the beneficiaries that they had when they first started, 10, 20, 30 years ago, and their lives might not be the same. I will indeed mention the annual benefit statement as well. The annual benefit statement, the My NC retirement statement came out early this year. Each person has one, lets them know if they're on track to be ready for retirement. But in checkpoint 4, it lists all the beneficiaries the pension plan has on file and all of the 401k. Should you have a 401k and a 457, it'll list that as well. But if you do need to make elections, you do have to go on the website. They have to go on the website as well. Now, our website is a good tool because it is indeed a tool for you too. And I'm going to make sure I don't forget to tell you about some of those tools that are available. So what happens when people leave their job? For the most part, they can keep their money in the plan. Separating service, just so you know, separating service is a trigger to have access to the funds. So if you have folks that are on disability and are still considered active, they are not separating service. I know it seems counterintuitive because they're not working, but they're still being paid. They actually have to be separating service. Once people do separate service, they can roll over the money to an IRA. They can actually roll it to their new employer plan. If indeed they just go to another entity within state government, which many folks do, then it's just a change of employer form just to let us know where you are. People can begin withdrawals. They can withdraw in any kind of payment fashion, monthly, quarterly, yearly. They can just call us up. Hey, Prudential, I've retired. Hey, Prudential, I've separated service. I'd like to withdraw my funds as needed. They can certainly take it all out. The transfer benefit says at retirement or later, you can take for example, your 457 assets, your 401k assets, and move them to the pension plan for an increased payout. I will tell you that folks that have been on short-term disability, but potentially necessarily, if they're eligible for retirement, this can be an option for them to increase the amount of pension benefit that they would get on an ongoing basis. So transfer benefit at retirement or later will increase their lifetime payout depending on their years, their age. It's never assessed a penalty if you just transfer the money over. So say, for example, somebody like that 48-year-old that was in the office the other day wanted to do the transfer benefit with 401k assets. Well, I know I just told you, hey, you got to be, age 55 in order to take out 401k money. But if you just move money to the pension plan for the transfer benefit, there is no penalty or taxable ramifications for moving it. On distribution, you have to pay your taxes on it because it's money coming to you. But transfer benefit is indeed, it can be a helpful option for folks that necessarily might have depleted a lot of their other sources or necessarily maybe have a reduced retirement. Okay, so transfer benefit. If indeed you have any questions about what people need to do, because I know they're in front of you and they're saying, well, what do I do with my 401k? Well, what do I do with my 403b? What do I do with my 457? We have a goodbye flyer. And many of our employers have found it very, very useful. They can either put it with necessarily some of the COBRA information or anything that's within your goodbye kit. It's only a one-pager front and back, and it basically just says options when leaving employment. So if you need that, you would like to be able to have that, we can get it to you electronically. We can also certainly have it printed for you, and that way you have a handful. Hey, what do I do with my 401k? You just get out the form. Here you go. Here's your options. You can keep it in the plan, you can roll it over, and so it's got the whole thing listed for you. And it talks about the transfer benefit and the resources available to decide if that's going to be good for you. That's another tool in the toolkit for you. Now, in terms of tool in the toolkits for your employees, the retirement income calculator can be very helpful because you can put a lot of information in here. Other outside assets, and you can put in your expenses as well, and it'll let you know if you're on track. So if you look over to the right-hand side of your screen, it talks about necessarily gaps and surpluses and necessarily are you on track. We still too are using 80% from all of your income sources. Are you going to be on track to be ready for retirement? And there's the annual benefit statement or the My NC retirement statement. It really does help people to pull things together. I know in our presentation yesterday, these are the kinds of things that necessarily can be tools for your folks. If they say, I don't even know where to start to plan to consider retirement, this is obviously one of those ways to start. Obviously, there's 18 education managers out there. There's 18 of them. So that's wonderful. Now, you're welcome to come here. You absolutely are. But for the most part, I know many of you on the call wasn't easy to come into the office. So all throughout the state, you have a retirement education counselor. The ncplans.prudential.com. You see the website up there, the ncplans.prudential.com. Meet your counselor. If you're not sure who your counselor is that's dedicated to you, it's listed in there by area. And it's got our phone numbers, it's got our email addresses. By all means, this is another tool for you as an employer that if you need any assistance, we're here for you as well. We do indeed have tools for your employees as well. We've got customer service center that's available Monday through Friday, 8 a.m. until 9 p.m. every day, Monday through Friday. The ncplans.prudential.com site is a really great site because it's got a lot of information on it. If they need more information about enrollment, more information about funds, more information about, like, for example, forms. If they want forms. Now, lots of things can be done online now, as you know, but there are some folks, and we know them, that they just would prefer forms. The forms are listed there as well, okay?